Welcome to the weekly update, where I'll go over the action in the market for the week of September 11th through the 15th, and then we'll see how things are looking for the week of September 18th through the 22nd. We had another down week for the S&P. The indexes themselves were mixed. Now, on the daily charts, we are mixed technically between positive and negative, and we're not trending right now, either in the short or intermediate term. The long-term trend is still hanging in there for right now. So what we'll do is we'll compare that with what we see in the weekly charts to try to reach some conclusions. Before I get started, please know that there's a PDF that's available in each video that I upload. I've been having a little problem with that. A couple of times this past week, I uploaded the daily video and I quickly got an email from YouTube saying that they removed that because it violates their community standards or something. And then I tried it again today with the daily video and it uploaded just fine. I haven't received any kind of a notice on that. So if you like the PDFs, please feel free to use them. If you want to use it and it's not there, send me a comment or a message, an email, and I'll be sure that you get the PDF that's available for that. There doesn't seem to be any trouble on Rumble. It's just YouTube. I do have a private Facebook group. It's not real active. I'm the only one that really posts there. But if you would like to join and maybe add some things to that, you're more than welcome to do so. There will be a new poll posted after I upload this video. And I'm really careful about YouTube comments. A couple of times this week, I had to go through and delete a whole bunch of bot comments. And I try to get rid of those just as soon as I see them. And if you see anything, please let me know, but I try to stay way on top of those. And then I also do post these videos on Rumble, and here's a link to the channel if you're interested. I did teach a class this past week. It was a free online course. I'm going to make the recordings available. Now, the course that I did a week ago, it's the same one. I just did it 3 hours at one time and broke it up into 3 chunks. This time I'm going to upload 3 videos from each night, Monday, Tuesday, Wednesday, or each day, I should say, when the course was conducted. So that is available if you want to go back and watch that. I talk about my approach to technical analysis. I go through some strategies, and then the last session goes through support and resistance. All right, let's go back and talk about what happened. For the week, we were down 0.16% for the S&P. Friday is when everything kicked into gear because we had a pretty solid up day on Thursday, but then everything shifted down, and that's when we went negative on the week. But volume was above average. This is due to quadruple witching. Some people call it triple witching. It's when futures contracts, options, stock options, futures, all kinds of things, they all expire at the same time. And that's why we saw the huge upward move in volume. The technicals were still leaning more towards positive in the longer term, but we're having a difficult time in the short to intermediate term on the daily side of things. And we're coming into a weak period seasonally that I'll show you later on as well. And we're going to get a lot of Fed speak this week. The FOMC is going to meet on Tuesday and Wednesday. On Wednesday at 2 p.m. Eastern, they will make their announcement. And then after that will come the press conference, and the market is highly anticipating that. Our trend is the same as before. We're still positive. The green line's on top, but we are coming down. So it's positive with more of a negative slant to it. And it's a weakening trend because we're right on top of the moving average right now. So I count that as more of a weak trend than a strong one. For the week, the Dow was actually up 0.1%. The NASDAQ was down 0.4%. The S&P down 0.2%. And small caps were down 0.2%. So the Dow was the only index, at least the major index that we follow, to have an advance where the NASDAQ and other indexes actually saw modest declines. We did have quadruple witching that I already mentioned. The S&P and the NASDAQ closed below their 50-day moving averages. That's on a daily chart. And that's kind of a line in the sand. Above and below denotes positive or negative. We've been dancing above and below it at multiple times this past week. And then Apple is still in the news. They're seeing more weakness coming into the stock after reports came out that some folks in China, they don't really want to use Apple devices anymore. And then there was the release of the iPhone 15. And I guess it's kind of a buy the rumor, sell the news thing, but overall, Apple has been rather weak lately. And that's such a huge stock that it impacts the Dow, the S&P, and the NASDAQ 100. And then Adobe came out with their earnings, and it wasn't so much that their earnings were bad. Looking forward, that didn't really excite the market. So they dropped 5.6%. And there were lots of other stocks that had weakness too. I'm focusing more on the tech ones that have an impact. Semiconductors, which have been holding up quite well, they actually started to bottom and turn into an uptrend back in 2022 after we hit the low. Well, they saw some weakness this week, down 2.5%. Netflix also ran into some trouble. They fell 10.4%. They're trying some ad businesses out, and it's not really hitting their bottom line yet, and the market didn't really like that. There is a strike now with the United Auto Workers. They're striking at 3 manufacturing plants. I don't know how long that's going to last. We don't know what impact that's going to have, either personally or economically. Right now, it's just a concern that we're keeping an eye on. Another thing that I don't have on here too, that I have been talking about in the daily video, is the student loan repayments are going to start coming back in again. And that could be a real drain economically, where that money had been pushed out into the economy or sent through to the stock market. If some of that money's not coming in, that might have an impact. And we're also dealing with a potential government shutdown. So be aware of those things happening. Core inflation came in this past week, and we have the CPI, that's the headline number, and then the Fed looks at what's called the core inflation. On a year-over-year basis, it's still improving, but it's above where the Fed wants to get at 2%. And so this is keeping that scenario going that they're going to have to keep rates higher for longer. Interest rates, oil, those were both up, and the dollar was down slightly on the week. It wasn't really a big moving week overall. We're keeping an eye on the VIX. This is a chart of the average from 1990 up to 2022. That's the blue line. The red line is what the S&P has been doing lately. And if we continue to follow along what we've been doing before, and we don't know if that's going to happen or not, we've been kind of close to that up to this point. But if that happens and this goes up, that means stocks are going down. And this doesn't top out until the middle to latter part of October. Just something to be aware of. We don't use this to make decisions. We just want to know about this. We're also keeping an eye on inflation, where the blue line is from 1966 to 1982. The gold line is what's been happening lately here, and they're put over top of each other. Again, just use as a guide or a model, because we could break away from this at any point. We do see inflation, at least what it was doing back then. It did decline for a while before we saw a big run up in inflation after that. So we have to wonder, is that going to play into the future at some point with what we're dealing with now? This is also something that I got from Shivako Capital, and I've been including this in the daily video. I wanted to include it here. This is RenMac, and I found this chart on Twitter. If you want to go find this yourself, they did some research and found that we run into problems with interest rates when they go above 4.02% with the 10-year yield. When we stay below that, it's not as negative for stocks. When we go above it, that is more negative. Right now, we're at 4.32%. So we're in that area of problems now as interest rates have been going back up. Here's the poll results for the last week. The first question, oil, interest rates and the dollar have been rising, which has pressured stocks. Do you feel that this will continue? 80% said yes, 20% said no. Oil and interest rates were still up, but the dollar was down slightly. Then the long-term trend remains positive. Do you feel that we're shifting to a longer-term downtrend? 25%. We're seeing a normal pullback that will turn positive, and I have to have my obligatory typo in here somewhere. 63% said that, and then we're uncertain because of the environment, and we've been trendless right now. 13% thought that. And we're still going with this idea where we're seeing a normal pullback before we turn back positive. We haven't broken a lot of long-term trends yet. We're still hanging in there. It's still just looking like there's a pullback for right now. Doesn't mean that's what's going to play out. It's just how things look at this point and how they have been looking since we started to hit some problems in August. With the current scenario, good news has been bad news and bad news has been good news. Do you feel that this will continue? The bad news will suddenly be good? Nobody thought that. Good news will be bad, 40%. The market will shift to a new scenario. We're not really shifting yet. Maybe that's going to happen after the Fed meeting this week. We're just kind of using variations of the scenario that we've been working on, that the economy may be stronger than expected, because we had some economic reports that suggested that. That's when we were going down in August. And then we had some weaker than expected reports come out. That's when we saw a bit of a bounce. And now we're kind of in between, just waiting to see what the Fed is going to do. And in the meantime, the scenario that we work with is not really changing. As of Friday, a week ago, the S&P and other indexes, they're at a midpoint and could go either way. Do you feel that we'll go up 25%, go down 50%, go sideways 25%? We pretty much have gone sideways and we're still at that midpoint. Nothing has really been decided. We're back to a mixed picture on the daily charts, and we'll see how they line up with the weekly charts. And I have to hit this a bunch of times. I did pick out a few charts. I also had this in last week's video. This is the S&P 500 return compared to the seasonal pattern. So it's a little outdated here, but the red line is what we're doing right now. And historically, and what has been happening is that we tend to see some weakness going into October. You could push that out. It's kind of hard to know where this is. I would say maybe to the middle to latter part of October before we see a nice run up going into the end of the year. We don't know if that's what's going to happen now or not, but this is historically what has happened. The thing that we're really watching is earnings looking forward, and that's the red box is where we're at right now. What the market's paying attention to is what are they looking like going forward from here? And this is what Goldman Sachs is forecasting. And this is what's keeping the market together for right now. We might be having some economic difficulties. We might be seeing some slowdowns. Some stocks may get hit as their earnings are released. But looking out into the future, longer term, the forecasts are still pretty rosy. Now, are they justified? We don't know. They're constantly being adjusted. We just go with what we see right here and then adjust accordingly. This is another chart of earnings, and I put the red arrow on here. Looking out from 2023 all the way to 2025, earnings are still projected out, no matter if it's Morgan Stanley or the consensus. Everybody's looking pretty rosy going forward. We had some FactSet blog posts here where it says the lowest number of S&P 500 companies cited inflation on their earnings calls. They're still talking about it quite a bit, but it's really dropping off. They don't seem to be as concerned as they were. And then we have where are analysts most optimistic on ratings, and they break it down into all the different sectors. I don't go into that. I look at this chart that just says, okay, if we're going up, that means there's more buy ratings. If we're going down, that means there's more sell ratings. I don't pay real close attention to that because there's a lot of political things that go on. If you're an analyst for a company and you bash them and say we should sell them, well, do you think they're going to answer your phone calls? Do you think they're going to give you information? No, they got to be nice to these companies. And so sometimes they're more favorable. All right, let's go into our charts and analysis. We look at a daily chart. On Monday, we were pretty much sideways. We had a lower open and then closed near the high. We gapped lower on Tuesday, saw some early weakness. We bounced back up, but then we spent the day falling back down. This is when the professionals closed the market. We created like a big N on Wednesday. Then Thursday, this was the most positive day. We gapped higher. We tried to come back a little bit, but then we ended up shooting quite a bit higher, only to give all that back and then some on Friday, where we gapped lower and then just spent the day going down, down, down. We kind of hit that 44.50 level. That might have been an important strike for a lot of the options that were expiring, a lot of the different strategies that are implemented. They may have centered right around that strike price, so they wanted to have prices close around that level. Just a guess. I'm not saying that is what happened. So for the week, we had the NYSE and the Dow was actually up. Now that's Friday to Friday. When you just take the 5 trading days, the NYSE was up and all of the other indexes ended up being down. Going back to the beginning of the year, we still have the NASDAQ 100 and the NASDAQ and the S&P doing the best, and all of the other indexes are still positive. Going back to the all-time high, all of the indexes are negative. Looking at different sectors, we were down, so that's the way I sorted this, where we had tech being down the most, And then we had industrials. Those have been some stronger areas, but they didn't see a lot of love this past week. Where some of the areas, we did have communication that was up, and that's been strong this year. But the financial sector, discretionary, it's one of the stronger areas as well. But the utilities are what really bounced up this past week. Here's the relative rotation graph where we're seeing a little bit of a shift here. We're not really seeing anything really strong at this point, where we have I always have to look at this, discretionary and communication. They were really leading things higher. And then XLK, that's tech. We're seeing some weakness coming into that area, where we're seeing energy just really roaring back right now. And a lot of the other sectors are showing some improvement. That's why they're blue. But we still have staples down here that are just not doing really well. They did great in 2022, but they've been really suffering in 2023. So for the week, here are the sectors where we had utilities, energies, financials, and real estate up. These areas have just been getting hit hard lately. Well, they saw a bit of a bounce where you have tech, discretionary, and communication. These are the stronger areas. Those were the ones that were either up just a little bit or ended up declining. Going back to the beginning of the year, we still have communication, tech, and discretionary doing the best, with all of the other sectors underwater. And everything, well, I shouldn't say that, not everything. Energy is still really in the lead, going back to the all-time high, followed by industrials, tech, healthcare. There's a few other sectors that are drifting more positive, but then the rest of the sectors are negative back to the all-time high. Looking at sentiment, we're getting back more into the neutral area of things. We're right around that 50 level. And here's the historical chart where we did get extreme positive. That was in July. And then as we were coming down, we started to get more negative. We never became really extreme negative down here, but we're seeing some improvement, but we've been chopping more or less sideways. So we're heading more into a neutral reading right now. Here's the active asset managers. Back about the time we hit the high, they were extremely optimistic. Then they became quite pessimistic. And then we saw a bit of a bounce after that. So looking at this same chart, we had a reading of 57.98, a little bit of a bounce up from a week ago. The VIX also continues to be at a very low level overall, even though it ticked up slightly with the bar chart and the line chart. And the Ulcer Index is showing a bit of an improvement. It's going up a little bit, but it's still below the red line. Looking at the RIDEX bear bull ratio, it really spiked up when we were going down, and then it's starting to show some improvement here. Now, this does not include Friday's session. The last update for this was on Thursday. This will probably spike back up because folks have a tendency to react to what's already happened. The active, I always say that. I don't always do. I've been lately saying active managers. This should be the American Association of Individual Investors. They were getting a bit more optimistic about things. Well, they were showing a bit of an improvement when we were up a week ago. And then when we're down, they, again, tend to react to that. We're not really seeing any kind of an extreme reading with this right now. This is still positive. The black line is what we follow. This is comparing cash to the tech sector. When this is going down, that means tech is outperforming. And we had some trouble in 2022. Well, now, even though we've been having some difficulties from August into September, we're still not really falling apart, at least yet. Looking at the economy, this is the GDP Now forecast, where it came down just a little bit. We're just under 5%, where the different forecasts go anywhere from just under 4% to about 1.5%. Here's what it looks like on a chart, where we're quite optimistic here with GDP going forward. And then looking at the spread between risky and not as risky bonds, if we were really having some problems, this chart would be going up. We're continuing to fall. So this is not suggesting that the economy is going to fall apart. Also looking at the National Financial Conditions Index, if we were falling apart, we would be going above the black line. We're actually declining. This is a bit outdated now since the end of July, but this just shows the tightening of lending standards by banks. And then we have the real-time SOM recession indicator, where this was updated a week ago. When we get really nervous is if we go above the red line. We're just still dancing around the black line. And the same thing is true with the smooth US recession probabilities. We're at the black line. We're not even getting close to the red line, at least yet. The Bray Butters Kelly Index. This was updated this past week, and it is going up slightly. So we want to be a little bit careful of that one. This one tends to be a little more sensitive to what's going on economically. Keeping an eye on inflation. We did get CPI this past week, and now we're seeing some adjustments going forward here. Keeping an eye on the Fed. Now, they're in lockdown mode now, meaning they can't give speeches or interviews or anything like that. But as of Friday's close, there's a 98% chance that the Fed is going to leave rates unchanged. We still have Monday and Tuesday and kind of Wednesday for the market to react to this. But if you look at the next chart, we really haven't changed. If anything, the market has become more convinced, because the dark blue area, that's where we're at right now, than we have a day ago, a week ago, and a month ago. We become more convinced over time that they're not going to raise interest rates. So it's not going to be about that on Wednesday. It's going to be more, what do they say in their statement? And then what is Jerome Powell going to say at his press conference? That's what the market's really going to be paying attention to and secretly trying to interpret what he's saying. The Fed balance sheet continues to decline, and then we saw that at the beginning of, well, we saw that in June of 2022. It ticked back up when we had the banking problem, and it's still continuing to fall. Here's the year-over-year change showing how their balance sheet is decreasing. Okay, looking at our charts, we're coming down a little bit based on price and volume, but we're still positive on the weekly chart, looking at the advanced decline line. The new highs, new lows, we're declining with our 4-week moving average, and we're turning down just a little bit with our 10-week moving average. We're still above zero with the advanced decline ratio, but we are declining. And that's kind of what we're seeing quite a bit in the daily charts. Things are hanging in there positive, but showing some weakness. Accumulation distribution. This is a concern on the daily chart. We're dropping below the red line. And now in the weekly chart, we're also dropping below the red line. This tries to measure what is the smart money doing. And we want to be doing what they're doing. Well, we're seeing some weakness, not only on the daily chart, but now on the weekly chart. That's a bit of a concern. Keeping an eye on our trend. The black line is the ADX, and we're flattening out, and we're slightly below the moving average. So we're showing a weakening trend. However, the green line is on top, but it is declining. So it is positive, but showing some weakness. At the same time, we're seeing the red line also continuing to go down, and this is working more into a non-trending situation where we're on the daily charts, we are well below this 20 level and below its moving average, suggesting that we're not trending. And that's kind of what we saw this week, especially Thursday and Friday. We had a big up day and then a big down day. We really didn't end up going much of anywhere. Here's our Arun, not really showing much of a change. It did decline just a little bit. This is still positive. The green line is the buyers, the red line are the sellers, and the oscillator compares the difference between the two. When we're above zero, that's more positive. The MATS index, we did get a signal generated on the daily chart where we come above the red dash line, and then above, we kind of got above the blue line, but not really. And then when we turn back down and cross below the red dash line again, that's a signal looking for a reversal of whatever's been happening. Well, we had that signal triggered about a week ago, and we've been chopping sideways ever since. Plus, as the MATS index on the daily chart was being calculated, it started really going up when we were declining in August, but then it kept going up as we were going up in September. So we're not real sure what kind of a signal it's trying to give us right now. Longer term charts. First, we look at the daily chart where we've been bouncing above and below the 50-day moving average. You can see on the bottom where volume really spiked up because of quadruple witching. The trend channel, we're still above the midpoint, so we're hanging in there positive longer term. And we did hit that resistance level back in July, and we have not been able to get back above it ever since. But on a longer term basis, we're still positive when we look at the 50-period simple moving average. We're still in a long-term trend with the blue line above the red line. We look at the McClellan oscillator. This is a little more negative. We're dropping below zero and declining. Then the next chart is the summation index, where we're still slightly positive on this chart based on price. We're still negative based on volume, seeing a bit of a mix there. Swenlin trading oscillator did tick up just a little bit. We're barely above zero with volume, and we're just a little bit positive based on price. So this is actually showing some improvement. The BPI, this is a little bit concerning. We're getting down to this 50 level now, and we're showing that same thing on the daily charts. If we drop below 50, that's going to turn things more negative. The PMO starting to roll over. We're just about at the midpoint based on price, and we're slightly negative based on volume. The PMO studies turning up a little bit with the PMOs that are rising, seeing a little bit of a tick up in the buy signals, but we're flat to declining with the PMOs that are above zero. The percent B indicator with the Bollinger Bands on the weekly chart, we're still above the midpoint, so that's positive. We're just right about at the midpoint on the daily charts. We use the bottom indicator to show us extreme positive or negative readings. We're not seeing any right now. We're slightly positive, though, because we're above the midpoint, but we are declining. Then we're looking at our oscillators. We're turning down with the slope and the TSI, the MACD, the PMO starting to roll over, the PPOs rolling over, and the tricks and KST. So longer term, momentum-wise, these are pretty much negative, where we're still mixed with the daily charts. Chicken money flow, still positive but declining. This is another measure of the smart money. Then the Chaikin oscillator, we're dropping below the midpoint and starting to really decline. That's more negative. The force index is declining, but is still positive. The money flow ticked up just a little bit and is above 50. That's positive. The rate of change, since we saw very little change, we didn't really move much here. Going back 50 periods, this is starting to get a little extreme now. So this compares the price with this week versus 50 weeks ago. And this has been going up. And other times when we got up into this area, sometimes that marked the top. Now, we had the whole big run up in 2021. So this can still go a lot higher. We just want to be aware of this for right now. The RSI still above 50, but it is declining. Positive, but negative in the shorter term. The special K weekly chart, we're still below the red line. We're still above the red line on the daily chart. The Stochk RSI, and this is just shows you how touchy this indicator can be, especially when we're not trending. On Thursday, when we had the update on the daily chart, we went extreme positive. On Friday, with the down date, we've already gone extreme negative. Well, here we're starting to get extreme negative here, but we could still go lower than where we're at right now, or this may mark some kind of a bottom before we get set to go higher. The Williams percent are still about at the midpoint, so it's not really giving us any kind of an extreme reading. The ultimate oscillator is negative. It's below 50 and declining. The vortex, the green line's still on top, but it's declining, and the red line is advancing. The Copic curve is not generating a signal right now. It generates one when the black line crosses above the red line. Longer term, we're still hanging in there okay. We're dangling around this moving average. This is a 10-week moving average, and we still have lots of support below where we're at right now. Different charts. Starting to show some real small candles here, just suggesting some sideways move on a weekly basis. We're slightly negative on this chart, where the Kegi is positive because it's black, but it's pointing down, so that's negative. The Renko is still looking positive, but the three-line break is starting to look a little more negative. So we're seeing a mixed picture here. The ease of movement, we had a slight down week overall, so our ease of movement based on one period didn't move all that much. What I follow is the 14-week, where we're above zero, but we are declining. Didn't have anything new in the point and figure chart that was generated, so there's nothing to share with you there. Looking at the Elder Impulse system, we've been neutral now for the last 2 weeks after we had been positive. But when you look at the parabolic SAR, we're still negative on the weekly chart with the dots on top. We're also negative on the daily chart with the dots on top. Our longer term PPO studies, we're flattening out in the long term, seeing a little bit of weakness in the intermediate term, and we're seeing a little bit more weakness in the short term. And then here's some daily charts, because I don't know if you watch the daily videos or not. I just want to point this out. We're not really getting anything right now from this chart. We have an intermediate term trend. We came back up to that, and we've been down below it ever since. If we really start to tank from here, we'll be watching this trend line. And believe it or not, from a longer term perspective, as long as we stay above this trend line right here, we're still more positive. Looking at the 50-day cycle, we did have a change on August 1st. We're in the middle of this cycle, and we won't get another change until October 11th. Looking at the Dow to transports, when this is going up, that means the Dow is outperforming. When it's going down, the transports are outperforming. Well, we're ticking down just a little bit now. the NASDAQ fib levels. We're not really paying attention to this that much. We've been dancing above and below the 61.8% level. So it's not really providing any hit it and turn type of reading right now. Keeping an eye on the NASDAQ 100, we were able to get above the 50-day moving average, above the pivot, above this previous high, but then we ended up closing down below it on Friday. Some broad market. First, we look at seasonality, where September is the worst month of the year. We're down 3.5% so far. Then just looking at a blank chart with the S&P, the mid caps and the small caps, not anything really staggering. If there's anything that we're concerned about, it's that the small caps are quite weak right now. The Dow is still in an uptrend. The NASDAQ is still in an uptrend. NASDAQ 100 is in an uptrend, and the mid caps are in an uptrend, where the small caps, they're dropping below their moving average, but they're still in an uptrend. The NYSE, broad measure, is still in an uptrend. All stocks are in an uptrend. The 30 biggest software companies came down to this red moving average, but we're still maintaining a positive trend. The FANG index, and this has been holding up fairly well on the daily charts. We have a 50-period moving average that we follow, and we closed below that on Friday, but we stayed above that. Okay, this is going crazy. We stayed above that for most of the week until Friday's session. ARC is still in a longer-term uptrend, and it was down about 1.42% on the week. The banks trying to get a little bit of a bounce going here, but the RSI, even though it's going up, is still below 50. The MACD is potentially crossing over negative. And then the deposits, we're seeing a little bit of an outflow in deposits, and that's the number that we see right over here for the week. Keeping an eye on the different indexes, the Dow, the transports, and the utilities. I'm not doing really any studies on here. The transports have been weak lately, and that's really been putting some pressure on the S&P. But you can see we really bounced up with the utilities. We're wondering, is this going to change things, or is this just something that's going to happen and then fade away? Some other markets that we keep an eye on. The CRB index is now crossed over positive on the daily chart, and we're crossing over positive on the weekly chart. And that could add some inflationary pressures. And we're seeing oil really starting to go up, and that's been putting pressure on stocks. It's not that oil's going up, it's going up the way it is, which is making the market fear about inflation. Where copper is pretty much treading sideways and looking more negative. We're just slightly below the moving average. It's kind of hard to see. The dollar has still been hanging in there. It was down on the week, but it's going up into the 105 range. And gold, even though we're seeing some weakness, is still in an uptrend. Now, if this keeps going, we might see a death cross here. And the same thing is pretty much true with silver, where we've been chopping more or less sideways. And a lot of the gold people, they can rationalize that gold should be going up for any reason. We just look at the price charts, and okay, yeah, they're still in an uptrend, but they've been really choppy. Keeping an eye on bonds. We're starting to turn negative with our bond ETF, the total bonds. But when you compare stocks to bonds on a monthly chart, stocks are still outperforming. And then we keep an eye on this. And this is not showing us anything strange right now. We take the 1-month yield and subtract the 3-month yield, and we get a negative answer, which is what we should get. This real gyration here, that was around the debt ceiling crisis. The reason I'm keeping an eye on this is we've got this potential government shutdown that may be looming in the future, and this might really start to gyrate if that happens. Then looking at our yields on the daily chart, where we've been going up overall, and we still have lots of inverted yield curves. Here's a weekly chart showing how the UK went up this past week. They have the highest rates, followed by the US, Germany, and then Japanese rates are actually rising up a bit. And we're keeping an eye on Japan in case things start to fall apart there. If things start to fall apart. Okay. Some different relative studies. First, we look at an intermarket analysis chart going back to the beginning of the year. Even though stocks have been under weakness, they still have been performing the best, followed by oil. Then we have the dollar and gold, and bonds since the beginning part of August have turned negative based on price. Then we go back to the beginning of 2022, where oil is still in the lead, followed by the dollar and gold, where bonds and stocks are still negative. The NASDAQ to S&P 500 shows that the NASDAQ 100 continues to outperform. and the S&P 100 is outperforming the S&P 500. Growth continues to outperform value. Gold is still underperforming the S&P, and gold is also continuing to underperform the dollar. And bonds still are underperforming stocks. The low volatility stocks, which did really well in 2022, they're underperforming in 2023. And we came down to this previous low and saw a little bit of a bounce. We're wondering, is that going to turn into something here? And then when we look at the staples to discretionary, it's still showing that discretionary is outperforming staples. So even though we've seen some weakness, we're not seeing things really falling apart at this time. Now, that could always change, but not right now. Then energy, which has been seeing some real strength lately, it's still continuing to underperform tech with this ratio. And then our secular, which means decades, and cyclical trend studies, these are the long-term seasonal trends that I refer to in every daily video, where we hit the low back in October as measured by the NYSE breadth thrust, and then we're still working off of the signal that was generated, and that's long-term positive. Then we also have a ZWAG NYSE breadth thrust, where we actually came back down and went negative again, but we've been showing some improvement there. That's also a long-term positive signal. And the NYSE Zohorchak method, that still continues to be with a buy signal. And then looking at this trend, going all the way back to the 1987 crash, then I connected that with the dot-com bust, and then just shot the line forward, where we fell below this back in 2007, and then finally it acted as resistance a few times, but we didn't break through this until after the COVID plunge and all the liquidity was coming into the market. Well, in 2021 and into 2022, we fell below this, and now we've been coming right back up to this trend line, and we're wondering, is that going to cause a problem? And here's a more shorter term look at that same chart, where we're just dancing along this trend line. And it's really hard to be dogmatic about this. We've been hanging out around this line for quite a while. We're also playing that same scenario with the NASDAQ 100, coming back up to this trend line, wondering, are we going to break through it and keep going up, or is this going to pose a longer term problem and we're going to start to go down? We're also watching this, the NASDAQ 100 to Dow ratio. We're still getting a very high reading here. When we had a high reading before, that was right before the dot-com bust. When we had another high reading, that was late 2021 before we ran into all the problems in 2022. And now we've been coming back up. We're not quite back up to this level yet. We're wondering, are we high enough to maybe cause a problem, or are we going to try to go back up from here? And then our momentum studies, I'm really not showing that from a momentum perspective. I'm really showing the MACD here, where it had been positive for quite a while here, and now we're turning more negative. And that's one of our oscillators that we follow. Tom Bowley with StockCharts.com and Earnings Beats, he has a free email newsletter that he sends out. This just says that September is the worst calendar month, where we're coming out of the beginning of the month where it tends to be positive. Went through this weak time, and now we're wondering, are we going to hit a little bit of positive time, at least currently, but then we tend to see some real weakness going into the latter part of the month. So this is just the outlook for Monday, but it hasn't changed all that much. We're still dealing with earnings season that is being released. We did have quadruple witching on Friday. And then there's the United Auto Workers strike to deal with. The government shutdown. Is that going to happen? Right now, it's a bunch of political games going on. And then the student loan repayments are going to be restarting. That could have an impact. The technicals on the daily side are mixed, and we're not trending. We'll get the NAHB Housing Market Index on Monday. Then we're going to get a slew of other reports throughout the week. We're keeping an eye on geopolitical events. It's about inflation and interest rates, and what is the Fed going to say in the upcoming week. Here is the economic calendar for the upcoming week. We'll get the FOMC announcement on Wednesday. We'll have the leading economic index on Thursday, and those are kind of the big ones that are going to be happening. But we'll be getting like on Tuesday, we'll get the housing starts and building permits. They tend to be a leading indicator of how things are looking in the real estate area. For Monday, September 18th, we tend to be quite positive historically. The Dow is up 81% of the time, the S&P is up 71.4% of the time, and the NASDAQ is up 81% of the time. Keep in mind that this is the week after options expired, and we tend to be pretty decidedly negative. We're down 69.1% of the time when you take the whole week together. We will be on the 11th trading day of the month, where we do see some positive action here for the pre-election statistics. But then keep this in mind. This is put out by Carson, where here's the 18th. We see a little bit of positive going in here, but then for the rest of September, historically from 1950 to 2022, we have seen weakness. Here's another attempt to measure that same kind of thing, but this is just looking at pre-election years, where the NASDAQ, have we bumped up to this high now? And will we see some more weakness going into the latter part of September? And we're also seeing a bump here with the S&P and then potentially some weakness. Now, the market could totally go against this and do whatever it wants. We're just looking at what has happened in the past just to give us an idea of how things might play out this time. Because if everybody starts to take this for granted that we're going to decline, that's when the market's going to turn and go up. So it likes to defy human logic a lot. And then going back to 1950, we're only up 33.33% of the time for the S&P during pre-election years. So our scenarios, this just applies to Monday. We're not going with the up or down scenario right now because we're not trending. So if anything, we're looking at more of a sideways pattern. And there are strategies that you can implement that I go over in the class that I just taught, where you can make some pretty good returns by taking advantage of sideways environments. So our warning signs, the longer term trend signals that I talked about in this video, those are the trend lines on the NASDAQ 100 and the S&P, where we're still below those points. We're coming into a weak month, September together. We could still be dealing with some positive action in September, but then that's followed by weakness going later in the month. The equity put call ratio is going up, and that's negative. And the longer term equity put call ratio is also going up. The risk on posture, which had been showing some strength, is now showing weakness. The cumulative new highs, new lows for the NASDAQ are still showing weakness, but that's been going on for quite a while now. The 3-month yield is still above where we were back in 2007. We're waiting to see if that's going to roll over. That's what happened in 2007, which took us right into the great financial crisis. So we're just keeping an eye on that. It's not giving us a signal as of right now. The parabolic SAR chart, both for the weekly and daily charts, is negative, and we're still dealing with earnings season. We're kind of always dealing with earnings season. The setups that I also referred to in this video, those are still in the background. And the long-term daily special K chart is positive, where the weekly chart is negative. We're still above a downtrend channel upper line, and I go over that video in the deep dive video. We're mixed as far as the daily chart of our S&P 500 oscillators. The NASDAQ 100 chart is still positive, but it's rolling over. The S&P is outperforming utilities, and the Staples to S&P 500 ratio is declining. Both of these often give support to stocks, but we're just not really seeing that now. The Russell, the small caps, and the mid caps have generated recent golden crosses. Small and mid cap growth is still positive. The financial sector is working off of a recent golden cross. The Coppet curve, even though that buy signal is starting to look in danger, it's still there for right now. So our conclusion, we're mixed and not trending based on how things look just for Monday. We can say that same thing in the short and intermediate term, but we're still positive in the long term. Thank you. I hope you found this helpful. Please feel free to check out some of the other videos that I post. Have a really great weekend, and I will talk to you in the next video.